that, we should turn our attention to the rupee. It's a fresh record low on the rupee. It had breached the 74 mark in Friday's trade after the RBI unexpectedly decided to keep the reserve rates on hold versus expectations of a cut. But in Friday's trade, it managed to pull back below the 74 mark. Yesterday, it closed below the 74 mark. 74.06 was the intraday low. This morning, it opened below the 74 mark. I think it was 73.87 was the first stick on the rupee. As you can see on your screen, 73.87. And from there, we've seen a steady depreciation in the currency. I think this would mark the 6th consecutive day that the rupee has been under pressure.
Yeah,
Focus will be, I think, on next week's trade data, because that, you know, what had come out in the prior month is what had sparked off the big concerns on the back of the trade
actually,
deficit.
74.21 would remain as the record low.
Yesterday.
So we're very close to it. 74.15 now. But by all indications, it looks like perhaps that 74.21 could be taken out as well. In fact, just this morning, some brokerages were saying that perhaps at 75 mark will only be seen early next year. But the way it's going, I shudder to think whether, you know, it might actually come sooner rather than later.
Yes, absolutely. So 74.14, as Sumera pointed out, 74.21 was the intraday low on the rupee, which it had hit yesterday. So we're very close to the record level. The key to track will be, I think next week, the trade deficit will come out. In the prior month, it was a trade deficit, and the wide trade deficit, which had sparked off the big sell-off in the currency. 74.16 on that. Bhaskar Panda of HDFC Bank joins in now. Mr. Panda, afternoon. Your thoughts on the correction? It had started off a bit strong, 73.87, but since that level, there has been a more than a 0.5% fall in the Indian currency after the opening.
Yeah, I think, see, we must understand one thing, that, you know, it is mostly self-fulfilling. The morning was good because probably yesterday US was not open, and therefore it was definitely, you know, good beginning as Asia with rest of Asia. However, I have heard that in the market we could see some oil buying going on, so I don't know really if that is pushing it. But the mood in the market is that nobody, you know, wants to take a long-term position from the sale side. That means exporters are not selling in the longer term.
But Mr. Panda, is there a fear that when the US bond markets reopen, that given the bond market is
so they've opened, the level is 3.25, and this is after being shut yesterday on account of that Columbus Day. So 3.25 on the US 10-year.
Okay, Mr. Panda, you know, what remains in terms of a hope for intervention? Because so far we've not seen any level at which intervention is expected. But do you think 75 at the level of 75, you shouldn't rule it out?
No, see, there is, as RBI has said clearly, that they don't have a level to protect. Only thing they do is that they just, you know, come and smoothen the, you know, volatility, which is their stated objective, and I think they do that very well. So where it will go from here is anybody's guess, but technically speaking, it can go to, you know, 75, 75, 50. But it's very difficult to say at this point of time. What I can say with surety is that the kind of depreciation that we have seen in the past is not going to repeat. It is going to be calibrated. It is going to be, you know, pretty much not so volatile as it was in the past. So I think, you know, even if it goes in the direction it is going, it will be pretty much muted going forward.
Okay. In fact, now it's more than a 15% correction the Indian currency has seen since the start of the year. And even some measures by the RBI, you know, raising the tariffs on a few imported goods, the ECB borrowing window for oil marketing companies, at least they haven't arrested the fall there. Mr. Panda, do stay on. Lata is also joining in. Lata, anything you've picked up on today's correction?
Well, one view, and I think Mr. Panda will be able to testify to that. Over yesterday and on Friday evening, there was a substantial supply from RBI, which doused the demand. But now it does appear that the Reserve Bank has come to terms with the fact that, you know, crude is back again above 84, or for whatever reason, they are not supplying with the same. Yesterday, the market was talking about $1 billion that RBI may have supplied. and some such large amount on Friday evening as well after the monetary policy. That means they suppress demand artificially. And now that they are off, that demand is making its presence felt, and it is abetted by the fact that crude has gone over 84, back to the 84.5 levels. And the two together, a more expensive dollar and more expensive crude, is having its impact on the bond markets as well, which was trading for all of yesterday under the 8% mark. Now the yield has inched up to 8.03. And just one more point, a part of the way in which the demand for dollars has gone up could also be because of the way in which equity markets have slid. These markets normally reinforce each other's fears, and looking at the way in which the sell-off has happened, the dollar rupee market is also getting convinced that probably there will be more demand for dollars from FIIs, that a selling which appeared to have gotten exhausted is not quite exhausted, and it is continuing. So those who sell off shares will come back and buy dollars to take it back home. But I think Bhaskar Panda is better advised, better placed to answer that. Mr. Panda, do you think the equity market fall is fomenting the rupee market fall, and together they are fomenting a bond fall?
I agree with most of what you said. It's a self-fulfilling prophecy. We are fulfilling everything. So if somebody is selling up, somebody is, is getting affected by that. Yes, it's the, kind of scenario that is there in the market. But having said that, if you look at the depreciation that had happened, I'm looking at the monthly charts. So it has been very, very steep. What I have been telling and what I still maintain is that even if we depreciate from here, it is not going to be in the similar manner that we had seen in, say, last 6 or 7 months. Okay. That's what is my contention.
That it will, the worst of the depreciation or the steepest of the depreciation is behind us.
Yes.
Okay. Is there any other, abnormal demand? Is it, one had thought that the oil companies now will borrow from abroad and therefore the demand will go out. Is this demand largely importer demand, or is it equity market, custodial bank related demand?
I think both are there. Okay. As of now, I can see both are there, including, overseas players also.
Oh, okay. NDF market players. What about Reserve Bank supplies? It is not as robust today as yesterday?
I cannot comment on that because I don't have exact figures. So
okay, no, even I have only hearsay, not exact figures. Your point is taken. Mr. Panda, what about the bond market? We have seen now yields go back to 8.03. Do you think we are in for more yield spikes?
I think there will be some correction. If you remember in the morning, I was giving directionally, towards the higher side, not towards the lower side.
Yes, I remember that.
There has been a huge correction from recent trend. So probably this is a bounce back, I should say. As of now, I have not seen a major, direction coming from there. But it's definitely a good bounce back.
Oh, okay. All right, Mr. Panda, we'll leave it at that. Thank you very much for joining us. I remember reading out Bhaskar Panda's morning comment, and he said the rupee would be between 73.85 and 74.20. At that time, the NDF market said 73.86. So I said it's maybe going to be a surprise, Mr. Panda, on the lower side. But he's called it right. Actually, it's now heading towards the higher part of his band.
Yes, absolutely. And just keep in mind, the Asian markets too have deteriorated. Hang Seng, which was higher by about 130, 140 points in the morning, is now dipped into the red. So it's erased about 170 points from the top of the day. So as Lata was pointing out, it's the weakness in equities which are feeding into the currency market as well, and vice versa.